In this video, I will demonstrate IFRS 3 business combinations and the initial measurement of goodwill using the example of Louis Vuitton and its acquisition of a controlling 66% interest in Bulgari, which is an Italian jewelry maker. The value of the purchase consideration that was paid to the Bulgari family at the time of the acquisition was 3,019 million euros. We are given a list of the fair value of Bulgari's identifiable assets and liabilities on that date. The remaining 34% interest in Bulgari was 118.6 million common shares that continued to trade publicly on the Milan Stock Exchange after the acquisition. The price of the shares on the acquisition date was 12.25 euros. So how much non-controlling interest and goodwill did LVMH recognize in the Bulgari acquisition? Well, we're going to need to calculate the net identifiable assets of the target company Bulgari. So we have current assets of 901 million euros. Brands are valued at 2,365 million euros. Other non-current assets are valued at 64 million euros. We are going to subtract out the current liabilities of 319 million euros and non-current liabilities of 742 million euros to get a value for net identifiable assets of the target company of 2,269 million euros. Now we're going to need to calculate the non-controlling interest under the proportionate share method. The proportionate share method will calculate the non-controlling interest as a percentage of the net identifiable assets. And that non-controlling interest is 34%. So we're going to multiply 34% by the figure we just calculated for net identifiable assets of 2,269 million to obtain a value of non-controlling interest of 771.5 million euros. Then we're going to calculate the purchase consideration plus the fair value of the non-controlling interest that we calculated in the prior step. So that's purchase consideration of 3,019 million euros plus the 771.5 million euros to get a total of 3,790.5 million euros. So the goodwill, we subtract 2,269 million, the fair value of the net identifiable assets, from the purchase consideration plus the fair value to get goodwill of 1,521.5 million euros. So that's the solution to part A. Now let's look at part B. Suppose that LVMH had been an American company reporting under US GAAP. How much non-controlling interest and goodwill would it have recognized in the Bulgari acquisition in this case? So under US GAAP, Louis Vuitton would have been required to record non-controlling interest at its fair value. So evidence of the fair value of non-controlling interest would be the number of shares trading publicly times the price of those shares on the date of the acquisition. Using that method, the fair value of the non-controlling interest would be the 118.6 million shares times the price per share at which the shares were trading on the Milan Stock Exchange of 12.25 euros to get a result of 1,452.85 million. So that would be the fair value of the non-controlling interest under US GAAP. Then we would calculate the purchase consideration plus the fair value of the non-controlling interest. That's 3,019 million euros plus what we just calculated, 1,452.85 million euros to get a total of 4,471.85 million. And then we would subtract from that the 2,269 million value of the net identifiable assets at fair value to get goodwill of 2,202.85 million euros, which would be the goodwill reported had LVMH been using US GAAP to prepare its financial statements.